Hello everyone and welcome to the first lecture for Audit and Assurance for ACCA. Let's start our first chapter, which is Introduction to Assurance. Before we begin, I like to paint the full picture so we know what we're getting into. So here's a brief summary. We will learn about assurance, its definition, the various elements of an assurance engagement, and then we'll discuss some types of engagements. Then we'll move on to one of the most common assurance engagements, which is the external audit. We will discuss its purpose, the need for an audit, and the benefits arising from an audit. We will also discuss the concept of an expectation gap and the limitations of an audit. Then we will look at another form of assurance engagement, which is the review. We will discuss what a review is and what purpose it serves. Lastly, we'll round off with some important concepts like the separation of ownership and control, three similar concepts which are accountability, agency, and stewardship, and we'll also discuss various stakeholder groups. Alright, let's move on to the definition of assurance. So basically we have a very lengthy definition over here: an engagement in which a practitioner obtains sufficient appropriate evidence in order to express a conclusion designed to enhance the degree of confidence of the intended user, other than the responsible party, about the outcome of the evaluation or measurement of a subject matter against criteria. Let's go over all of the different elements we saw in this definition, because simply rote learning the definition does nothing for us. So we can break the definition down into 5 segments. We can call these the elements. So the first element is that there is a three-party involvement. Which three parties? First, we have the practitioner, the party that is going to be giving the assurance, the auditor, or any third party that has been employed by the company in order to give the assurance. Then we have the intended users. These are going to be the recipients of what the practitioner is going to provide. The recipients of, say, if the practitioner is preparing a report. So whoever is getting the report, whoever this assurance is for, those are the intended users. And lastly, we have the responsible party. These are the people who are going to be preparing the subject matter for which the practitioner is going to be giving the assurance. Moving on to the subject matter, this is the data that has been prepared, or information prepared by the responsible party. It can be a set of financial statements, it can be a report, it can be anything on which the practitioner is going to give his assurance, and the intended users are going to receive the result of that assurance. Moving on, we have suitable criteria. Now the practitioner is not going to judge the subject matter based on some vague principles. There has to be a suitable criteria to judge the subject matter against. For example, if you take the case of an external audit, the suitable criteria would be, say, financial reporting standards, or maybe local laws or other such regulation. Moving on, sufficient appropriate evidence. This is key in every single assurance engagement. This is basically the data that is going to be gathered with regards to the subject matter when we are applying a suitable criteria. For example, if I am judging a set of financial statements and my criteria I have used are financial reporting standards, so based on those standards, the evidence I will gather for the subject matter is going to be my sufficient appropriate evidence. Now these two terms are very key. The evidence should be sufficient, meaning in quantity we should have enough of it, and it should be appropriate. Appropriate meaning it should address the needs of the intended users. Lastly, we have a written assurance report. All assurance reports are going to be presented in written form to the intended users, because that is a high piece of evidence that they might need to make further decisions. Moving on, let's see some examples of assurance engagements. Basically, we have an audit, the most common assurance engagement we have. We have a review, which is like an audit, a few different procedures here and there. Then we have a systems reliability report. Basically, if an organization is using any sort of information system or any system, they need to know if it's reliable, so they might engage some experts to look into that. Then we have a verification of social and environmental information. Basically, nowadays companies need to provide some guarantees to the public that they're being socially and environmentally sound. And in order to verify that information, they need to employ some experts so that there can be more confidence in what they're saying. Then we have a review of internal controls. Internal controls make up the processes of a company, and if the processes aren't sound, the company cannot operate properly. So whenever they're implementing internal controls, they need to make sure they're implemented correctly and giving them the best result. Then we have value for money audit and public sector. Basically, public sector, as you know, for example, healthcare, police, or sewage management. These are all public services that the government provides, and the government, takes money from its citizens in the form of taxes and spends it on these areas. And they need to make sure that the money is being spent properly, value is being generated, for example. So that's where the value for money term comes. Money that is being put is generating a good enough value. Alright, we saw a bunch of assurance engagements in the last slide, so let's break them down into two basic types. First one we can call a reasonable assurance engagement. In this, the practitioner reaches reasonable conclusions by performing thorough procedures and concludes that the subject matter conforms in all material aspects to the suitable criteria. So basically, in the case of, say, or assurance report on financial statements, we can say that financial statements conform in all material aspects to the financial reporting standards, where over here the subject matter is the financial statements and the suitable criteria are the financial reporting standards. As a result, he will generate a positively worded report which gives a high level of assurance. The report might contain words like this: in our opinion, the subject matter is fairly presented in all material respects in accordance with the suitable criteria. Next, we will move on to something we call a limited assurance engagement. Over here, the practitioner will draw limited conclusions through performing fewer procedures and will conclude that the subject matter with respect to the suitable criteria is plausible in the circumstances, meaning it is acceptable based on performing limited procedures and drawing limited conclusions. We can say the subject matter is plausible. For example, we can say the financial repeating the past example, if it is a limited assurance engagement, we can say the financial statements are plausible when compared to the suitable criteria, which are the financial reporting standards. As a result, he will give a negatively worded report, which gives a low level of assurance or a moderate level of assurance. It may contain words like this: nothing has come to our attention that causes us to believe that the subject matter is not prepared in all material aspects in accordance with the suitable criteria. We can see the two negative points over here, negative wording, nothing, not prepared. So basically, as a result of performing fewer procedures, it basically means that we did our work, but nothing came to our attention which made us think that the work was wrong. So if we put it in the scope of, say, a review of financial statements, we can say nothing has come to our attention that causes us to believe that the financial statements are not prepared in all material aspects in accordance with the financial reporting standards. It is a very simple thing to say, but in some cases a review engagement is given where an audit engagement is not possible. And now we come to the last point, which is the main examples of both reasonable assurance engagement and limited assurance engagement. The most common reasonable assurance engagement we call the external audit. As for the most common limited assurance engagement, we call it a review. In the next video, we'll be looking into these two things in more detail. Thank you.